Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies, and how investors are reacting as we make our way back to normal. And Phil, with U.S. retail sales rebounding by nearly 18%, a record, seems as if American consumers are beginning to spend as states gradually reopen following the COVID-19 lockdown. So it's no surprise to see the surge in stocks this morning.
Yeah, stocks were already up on the back of some rumors of another $1 trillion injection of stimulus and the Fed being pretty positive yesterday on the bond buying program that they're doing. And this just extended those gains pre-market. But when we got the retail sales data, it definitely exceeded expectations. It made it look much more like we might have a V-shaped recovery for spending. And so the market's taken another leg up on the back of that. It's interesting looking at the data in a little bit more detail. Obviously, we've come from a low base and not all of the consumer spending has increased equally. So restaurants and bars only increased by 30%. You had things like furniture and some clothing up by more than 100% though. So people are definitely going back to shops, but they're still spending in the shops that are easier to get into with lower risk.
Phil, the big question this week is, and I feel like financial media has been all over this, who is buying this market? Is it retail investors? Is it this new surge of Robinhood traders that are out there? Is it, in fact, institutional? What is the data telling you?
The data's a little bit mixed because when you look at the data on the dash for cash that we've talked about weeks ago, it looks like the assets that are in money market funds are actually at all-time highs. So that's pretty defensive for people to be basically in cash and in pretty much record amounts of cash. Looks like no one's in the market. But we've talked before about the fact that there was record openings of new retail accounts. And we've written in the past about the fact that retail looks like their activity has increased on the trading front when you look at the trading data. So there's probably some good evidence that retail is getting into the market. Whether retail on its own is big enough to force the market to rally as it has is an interesting question. But there is some data coming out now that shows that hedge funds, which initially really aggressively delevered during March, might have turned around and started to get net long. And obviously they're levered because they're hedge funds. So those net trades result in quite a lot of net buying as well. So it's possible that hedge funds, which are really sophisticated money, and retail, which some would say are less sophisticated, are both buying the market. There's data out there, at least anecdotally, that says the people that are missing out on this rally are the mutual funds.
Well, you would think if they're staying in their investments that they have been in, I mean, especially over the past 3 to 4 weeks, you're essentially making money just sitting there. I mean, it's quite remarkable, the rebound that we've seen in stocks.
Yeah, and we've talked before about whether the valuations add up. But then again, you see data like this morning where the retail sales is coming back much stronger than we thought was possible. And the retail sales looks like a V. Whether we see a continuation of this all the way back to normal, it's nowhere near normal just yet. But if we do see a strong recovery in spending, we'll probably see a pretty strong recovery in the people getting back to work and working their full hours. There was also data out of China overnight that shows that they seem to be getting their production facilities back to normal quicker than people thought would happen, given all the supply and demand chain problems we've talked about too.
Mm-hmm. All right, and let's wrap up here with the latest COVID-19 data. We could take a look at some infection rates in Spain and Italy. Also, U.S. seems to, you're still seeing more cases, but the fact of the matter is, look how much testing that we're doing.
Yeah, so I think what's interesting is just how well Europe has got rid of the new cases. So the risk of walking around in Europe and being in public is just so much lower than it was during the peak of their cases. That's one thing that's not really true in the US. So we're still running at around about 25,000 cases a day, which is not far from our peak, just over 30,000 cases a day. That's the real difference between how the US has tackled coronavirus and how Europe has tackled it. But it makes a big difference in terms of getting back to work. So when you start to dive into the US data, what you actually see is the Northeast, so the Boston and New York area that was really badly affected in the initial stages with a very aggressive spread, has actually kind of got its cases under control a lot more like Europe. The Midwest, which was a little bit slower to see new cases, has also got its cases under control and is getting down below 50% of peak cases. But it's the South and the Western states now that are actually, they've slowed down the rate of increase in cases, but they are still increasing. And we can see a little bit of a spike in the cases in the south. And I was reading an interesting story today that maybe it's because of the fact that it's getting hotter actually puts people inside with all the air conditioning now. And we know from some of the studies that came out of China early on that being inside and being under air conditioning and also in Korea likely contributed to spreading some of the super spreader cases where one person's breathing was blown through an office or blown through a restaurant and lots of people caught it. So potentially the warm weather is not helping the South and the Western states.
All right, Phil, thanks so much for joining us.
You're welcome, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.